Forced to work from home by your employer? Laid off or feeling depressed at home? Do you want to make money working from anywhere? We'll show you how to do it from your couch. It's time for another episode of the Work From Home Show. Coming to you from their homes in Austin, Texas and Tampa, Florida, here are your hosts, Adam and Naresh.
Hey everybody, welcome to the Work From Home Show. Shout out to all our homies, homeboys, homegirls, home trans, all the work from homers out there. I'm Naresh Vissa. Today we have a friend of mine here in Tampa Bay. His name is Jackson Shembekar. He is the author of The Crypto Kid, a guide to understanding the basics of crypto and the mindset of a successful investor. That's also his nickname, The Crypto Kid. If you see him in the Tampa Bay area, you may as well call him The Crypto Kid. That's what so many people call him. He is the youngest portfolio manager in the world. At least that's what we think. He mostly manages crypto investments, a few other Web3 investment asset classes as well. I'm bringing Jackson on the show, not just because of his book, not just because he's the youngest portfolio manager in the world, but because his story is absolutely incredible. I don't even know if he realizes it. He is a student and a baseball pitcher at the University of Tampa as well. So we're going to talk a little bit about that. Jackson Shembekar, thank you so much for joining us on the Work From Home Show.
Absolutely, Naresh. Thanks for having me.
I want to start with your journey because I read your book, The Crypto Kid. In fact, if you remember, I was at your book signing that you had about 2 years ago. And
I do remember.
It was great. So reading the book, it was nice to learn about you and your journey. And I think what makes your story incredible is your story, not necessarily how you became ultra wealthy in crypto. We'll get to that. But I believe you were like 14 or 15 years old when you first started buying and selling cryptocurrency and Bitcoin specifically. So walk us through that story and that journey.
I got started very early, like you said, 14 years old. It was kind of the right place, right time. I had a friend of mine who essentially when I was a freshman in high school, he was a senior in high school. And he was one of those guys that you just knew was brilliant. He had the perfect SAT score. He had the full ride scholarship. He knew everything there was to know. And you just knew he was one of those kids that you wanted to kind of look up to, at least in terms of academia and business, things like that. And week one of high school, this guy is talking about crypto and think about the types of people that were involved in crypto way back then, right? So this kid,
what year was this? What year was this?
This is 2017. So this is right before the big takeoff. So think 2017 summer, 2017 early fall, right before Bitcoin's churning up to 20,000. We're talking single digit Bitcoin. We're talking no one's even thinking about Ethereum. That's kind of the time that we're thinking about. At this point, XRP is the third coin market cap wise. BNB isn't even a thing. A lot of these coins that you hear about today and are in top 10 aren't even being talked about, and some of them aren't even existing. And so this guy brings it up to me, and I am just intrigued, right? I'm a 14-year-old kid, naive for the most part, but I definitely like business. I have some very small roots, I'd like to say, that go all the way back until I'm like 11 years old. Just buying and selling things, right? It could be anything. And that's something that I really liked. I like this whole idea of revenue and profits, right? And so I dip my toe in and I make my first purchase of Bitcoin. And I remember this distinctly, right? I mean, this is way back in 2017. I'm using my parents' Coinbase accounts, which I create, right? Everything about it is amazing looking back.
Because you're 14 years old and you're not allowed to create an account.
Exactly.
You have to be 18.
I wasn't allowed to make an account. And so I create an account through my mom's portfolio. I verify the bank transactions, do everything I can, and I buy my first transaction for $20. And I remember this so vividly. Back then, Coinbase's commission scale, it was 5% right off the bat. Don't ask me how or why. I'm sure it was a sliding scale that as you make larger amounts, it would go down. But I purchased that $20 worth, and I had to pay 5% fee right off the bat. So just think about how how bad of a flawed investment that was, right? But I just wanted to dip my toe in. I wanted to be a part of it. And that was the beginning of the journey. I knew nothing at all about crypto back then. And since then, I've learned quite a lot. But the whole point was that right after buying that, I got busy. I learned everything I possibly could about the space, and I did not stop and have not stopped to this day, right? And so after I bought that first transaction, $20 is nothing. But I remember I went back to the kid. His name's Nick Indelicato. I went to him the very next day at school, all excited. And I'm like, Nick, I own Bitcoin. I bought $20 worth. I'm going to be rich. This is crazy, right? Think about all the people that you know that have that exact same mindset, right? It's the get rich quick. It's the young kids, the old people that think that it's going to create retirement for them. It's anyone that really doesn't know what they're talking about. But it's a starting point, and that's the key. And so I talked to him, and he kind of brushed it off, and he goes, Jackson, it's $20. It's not going to do anything. Even if you were to 10x your money, you made $200. That's nothing, right?
Yeah.
And that's a perspective shift for me right away, which is why I love this. I mean, I love the story, even though it's my story. I was able to learn all these lessons really, really early on. And I talked to Nick, and we're talking hours. And he basically said that if you want to be serious about this, you have to find ways to increase the portfolio allocation. And I go, okay, Nick, yep, you got it, right? And so I go home, I'm reading, researching, podcasts, YouTube videos, anything I can do, right? And so many losses throughout that journey, but it got me into Bitcoin. So overall, it ended up being a big win. And I was able to start what was a very small portfolio. And so I researched everything, ended up pouring like my whole soul into this for all of 2017 towards that tail end, and ended up being at the right time, right place. I ended up turning what was a very small 4-figure portfolio into $20,000 to $50,000 by the end of Q4. And you could think about all the different kind of allocations on why that spread's so big and everything. But right around that 50K mark, I feel like I'm on top of the world. I'm 14 years old. I just made more than the teachers that are teaching me right now. I felt like a genius. I was like, I cracked the code. This is all you got to do. I mean, I was like, why are people working jobs, right? And your head gets big. And obviously, I knew the very, very basic fundamentals at this point, but I knew probably nothing past that. And 2018 comes around, and it's a shocker, right? I get hit by the truck. I lost 80% of my portfolio, and it was an absolute bloodbath. And
this is in 2018?
Yes, this is 2018. So 2017, for perspective, Bitcoin skyrockets to right under $20,000. And 2018, Bitcoin bottoms out just below $4,000. And that's all in 1 year. So I go from this massive portfolio of just shy of 50 grand, and the portfolio shrinks all the way. That same exact just shy of 50 grand goes just below 10 grand. And I'm like, I don't know what to do. I feel
well,
like
you're still up. I think you started at $1,000, $2,000. Yeah. But it's still depressing. It's 50 grand.
Yeah, exactly. It's very depressing. I'm thinking that this is so much money that I could turn this 50 into 500 over the next couple of years. And now we're dealing with less than 10, back to single digit thousands, right? However, one key statement stuck with me. And again, this goes back to the reading everything, looking at anyone that's more successful than you and trying to really internalize their thoughts and their mistakes. And I think back to the quote by Warren Buffett, when there's blood on the streets, you buy, even if the blood's your own blood. And that was a big key for me, that as long as I still believe in this technology, as long as that mindset has not shifted, right? Because the whole thing is that obviously you want to be buying assets that are worth more than you're paying for. And as long as that kind of statement holds true, then all I'm doing is buying at a discount. And because of that, I stuck with my guns and I just kept on buying it. At this point, I'm doing anything I possibly can to get my hands on what is very, very small amounts of money, right? But I'm taking money from my younger brothers that believe in me and support in me, thank goodness.
Oh,
birthday
wow.
money, anything you possibly can get. Yeah, I got very lucky in which I had two younger brothers that fully supported me and wanted me to go all in on this. And so we were able to scrape together this 4-figure amount. And again, nothing crazy like some 6 figures, but we did put together a 4-figure amount, and I was able to go all in on this. And I started with what was this pretty cool thing I thought, where I ended up having this right around 4 Bitcoin. And I had some smaller altcoins and everything, but the number was 4. And I wanted to turn 4 Bitcoin into a lot more. And this whole idea was that if Bitcoin succeeds, if we hit this magical $100,000 number, 50,000, whatever it's going to be, no matter what, I'm going to have 4 Bitcoin.
Yep.
Fast forward multiple years, so much has changed. I got into trading. I did poorly with that, but then I made a major breakthrough. And long story short, I turned that Bitcoin from 4 into well over 16, developed my own trading arbitrage algorithm with some software guys out of Miami, spent some time in the mining industry, and wrote this book in 2021. And then the last step was I got involved in NFT investing, did pretty well there. Then worked on launching the fund, did a little bit of a shift there, and I work with basically private investors now. So we don't have any public entity that is very much established. However, I do work with people anywhere from an asset allocation of 50 grand to $250,000 plus. And yeah, that's just of my story.
All right, so there's a lot. You ended that answer with a lot that we need to drill down on.
Yeah.
But because you went from, I was scrambling, trying to scrape together cash, and then you started investing. You just made a ton of money, started investing in the crypto space and NFTs and all that. So before we do that, your friend Nick, what is it that he told you that you were like, wow, this is the greatest invention in the world? Like, why did you become obsessed with it? Because there's so many people who still 10 years later hear about crypto or Bitcoin and they're like, this sounds like a scam. It sounds like a fad. I still don't understand it. It's confusing as heck. What was it about you when you were 14 years old where you were like, I need to go all in on this?
Yeah, I liked a couple different elements. First off, I liked the whole peer-to-peer idea. When he was explaining A to B transfers and that there's no middleman, no central point of failure, I loved that right away. I'm a big person that's like, trust nobody. I firmly think that having a central point of failure, such as the central banking system, is a general issue, whether it's going to collapse today or in 30 years or not at all. That's not my decision. However, I think that having a system that is fundamentally better, why would we not invest in that technology? So I love the fact that it was peer-to-peer. And again, I love the fact that it was decentralized. And that ends up being a buzzword in today's culture all the time, that, decentralized, blockchain this, blockchain that. And a lot of people don't even understand what that means. But the whole idea is that as long as the system is being held up by multiple individuals, right? And that ends up being a lot of individuals, but multiple I'll use as a word. There's no single central point of failure. And that ends up being the whole point for me. I got hooked on those two ideas, and then everything else was just icing on the cake. I love the fact of 21 million being the hard cap for Bitcoin and it having a transparent inflation scale. And we look back to COVID and things, right? Nobody other than the Fed, right? And people that basically general consumers don't get to control that M1, M2 money supply. And that I don't think is conducive to a macro economy that's fair and just. Now, everyone understands that we live in an unfair system and that's how the world works right now. I'm not arguing that at all. However, again, the argument goes back to not what you think is currently working, but what do you think could work best? And that's where I want to invest in, obviously. And that's why you can extend that logic to anything. If you think AI can do X, Y, Z, then you should invest in AI, right? And then the question becomes, how do I invest in AI? What product are you going to invest in, right? So for me, it came down to, all right, I'm going to invest in the big two, Bitcoin, Ethereum. And I basically, you want to have a thesis, a justification as of why. And then furthermore, you can pick, again, smaller projects that I liked. And some were hits, some were misses, but that's how my investing philosophy kind of began.
You said peer-to-peer. Doesn't peer-to-peer make it easier to get scammed because there is no middleman or body overseeing the transaction?
I think to a degree, and I think that there's a key piece in this of central responsibility. There's no banker holding your hand in these transactions. It absolutely can be easier to get scammed if you don't know what you're doing. However, I see another big kind of pushback to this being that as more and more users come onto the platform, as the central audience becomes younger, right? Think about kind of boomers not being even wanting to use credit cards still, right? There's this idea that people will adapt to the systems in hand. Furthermore, I think that big entities that are able to capitalize on this and make the user experience much easier will prevent more scams occurring. Scams are always going to be out there. I mean, you could think about like Facebook Messenger. People are still scamming on phone numbers, trying to get verification codes from everybody. They're always going to be out there, but it's up to individual responsibility to prevent that. And I personally don't think it's a bad thing to put more personal individually in the hands of the user. I think that actually could be a controversial statement because a lot of people would argue that a central authority should hold that and that a central authority should basically babysit the user. But I'm a big proponent for competency and saying that individuals can do it. You're an adult, you can do it, right? That you can learn about this thing. And there are many, many ways kind of for us on the crypto side to make it easier for outsiders to get in.
I'm with you. I align with you philosophically or even politically as well. I'm all about individual responsibility. So I am a fan of crypto, of the decentralization, but I think a very large chunk of this country is not a fan of individual responsibility and want somebody spoon feeding them, telling them what to do, babysitting them, et cetera, et cetera. But with that being said, I want to go back to your high school career because you're 14 years old, you get into crypto, you get into Bitcoin, you make a decent amount of money, but by the time you graduated, I believe, so between 14 to 18, I want to learn a little bit more about how you grew that wealth from the $50,000 or the $100,000 to the millions of dollars. Because if I'm not mistaken, I think by the time when you graduated, you went to Jesuit High School in Tampa, well-known.
Yep.
Jesuit school. And by the time you graduated, I believe you gifted the school a donation, something like $1 million or something. So
yeah, so I'll kind of break down how that happened and everything. So my goal going into this, like freshman year, and I mentioned it briefly in that overview, was to somehow graduate with $500,000. That was the magical number I chose. I wanted to get to 500,000. Didn't know how I was going to do it, but I definitely think dreaming big has never hurt anybody, right? And that's what I wanted to do. And so I start with this amounts, right? And we're rolling forward, and I get killed in 2018, and it completely reverts in 2019. So what I'm doing is I'm playing simply with the numbers. I'm doing very basic trading, nothing sophisticated at all. However, I'm putting my time in. That's the key.
You're trading on Coinbase or another platform?
Back in the time, this was GDAX. So Coinbase Pro of today, they had GDAX. GDAX was completely commission free, which is why I loved it. It was very quick.
Yeah, I was going to say.
Easy to use.
Because if it was Coinbase, you would have been paying crazy commissions for every trade.
Yeah, no, of course not Coinbase. Yeah, so GDAX was, in my opinion, one of the best centralized exchanges back then just because it was free, right? You could place a $10 order or a $10,000 order or a $10 million order, and there are no commissions at all. I graduated from that, of course, but I was using GDAX, did a lot of trading, just the basic stuff. I nowhere was near profitable. I was basically gambling, but I was learning. Eventually, over time, I realized that I am not Wall Street, right? I don't think that I can, in the long term, be like a scalper or a day trader and make significant amounts of money, right? And I think for 99% of people out there, that's going to be the exact same thing. People get caught up in trying to be that 1%. I always ask why, right? Number one, I don't think so. And I don't want to be that hater that doesn't believe in you, but that's the stat. Less than 1% is going to do it. So why are you trying to do that when you could do something else, right? And so then my mindset shifted, right? I jumped into a couple different things, but I developed these ideas that I wrote about in the book. And I kind of wanted to stick with those ideas, and those principles have led me to success. So my first couple break offs, right? I got into mining, and that was a very interesting thing. I put together a very small team of people, some people that were very, very smarter than me, because I knew.
Get in.
Go ahead.
Where did you meet the people? How did you get in? And then I'll let you finish the rest of it.
Yes. So I knew some people in high school that ran mining rigs, very, very small scale though. So I reached out to them, got to pick their brain for a little bit, and asked them for some connections, right? I then moved past them and started like simply meeting people that knew this industry more than I did myself, right? I remember going to conferences in 2018 for the first time, very, very simple stuff, but that's getting out there, right? I got to meet people that were in this industry forever, right? When you're interviewing me, you're thinking about me that I've been in for 6 years. I was talking to people then in 2018 that have been in for 3+ years. So I was talking to the real veterans. Like I'm a veteran at this point, just because it's been so long since I started. But like I don't see myself as a veteran of the space. And I got to talk to these people and build connections. And before you know it, I've got this small little mining thing. The coolest thing about that was that obviously expending GPU power, we're getting these Bitcoin as the mining rewards, right? But I'm not selling it. The key for miners is that you only want to run your simulation, not your simulation, right? You want to solve these SHA-256 problems to acquire Bitcoin in these big mining pools if the Bitcoin is worth more than the energy you're expending. And it needs to be by a significant degree, because obviously you want to be paying off that GPU. Now, I do that, but my key was that I wasn't selling, because I thought Bitcoin was going to go up. And I was okay with this risk because I've always had this mindset of I'm in high school, I don't have a wife, I don't have kids, I don't have a college tuition to pay, I don't have any liability yet, right? And even today, my liabilities are
very important. Yes, take away.
I present this to so many people because even now, today, right, I go to college, my liabilities are rent and tuition. That is quite literally it. Utilities, I guess, too. But I mean, if I want to live frugally, I can. I don't have a wife that I have to take care of. I don't have to bring in all this money. I don't have to do anything, right? I drove a very nice car last year. I'm not going to say what it was, but very expensive. And I recently sold it, going to move on to something bigger in 6 months. But I bought that car in cash, and I wasn't a slave to the car. I could have bought a second one, and I could have had zero. And now I'm driving a car that's way less, and I'm very happy with it. So it's a very clear kind of idea that I didn't have any liability, so I was able to take enormous risk. Because if I had to start all over again at any point, I would just be like any other kid in America. And I still think that I'm smart, so I still think I could do it all over again. There's no big deal, right? And that's been my mindset that has been so fruitful to me, and it's been a very key advantage, because most people my age, not my age, but most people can't share that mindset. They just can't. And it's not a bad thing. It's not just the reality. If you have more liabilities, it's going to be tougher to just take on more risk right out the gate. So I want to hone in on that I was in a very lucky situation where I'm not having to take care of anyone. I only have to look out for myself. And me being a very low maintenance 20-year-old, I don't really need anything extravagant. I might like the extravagance, but I don't need it. And so go ahead.
Yeah, no. So you get into the mining, you have some success there. And I also want to bring up, because people listening to this, I got to ask a sub question, because I'm only, I think, 15 years older than you. Yeah. And you're making it seem, I don't know if this is just the culture nowadays with Gen Z, because you're considered Gen Z. Yep. But when I went to high school, it was literally you go to school, you go to class, you do your homework, you're in a few activities, and you go to sleep. You come home, do your homework, go to sleep. There was no dabbling in stocks. Of course, there was no crypto back. There was no watching CNBC, or you're using words like M1, M2, like economics was an elective course at most high schools. People don't even know what the Federal Reserve. It's just, hey, I want to get the A, live a high school life, party a little bit, go to homecoming, have a good time. But you're making it seem, you said that you had friends, people you knew at your school who you could start a mining business with. And is this the culture now in high school where kids are becoming more entrepreneurial, more money conscious at such a young age?
I think overall, yes. However, not like from a bigger picture. So if I think about like my high school, I had 800 kids there. 750 of them were still your normal kid. However, I do think I went to a private high school, right? It was all guys, who was very much like this male culture of just like egos running around. You do what you want, right? You don't have to impress any girls. It was that whole like bro culture where sports are at the forefront, business is at the forefront. I had that unique cultural experience that there were nerds in these classes and kids that really wanted to do something. Not a whole lot, but enough that you could have conversations. But don't get it twisted. I don't think that just Gen Z, that a lot of people are being overproductive and everything. No, I still think that this generation is overall lazy and counterproductive. They lean on tech to kind of make up for their shortcomings. Just my personal 2 cents. But it did open a door that I could talk to some people. Again, not a lot of people, but there were some in which I could go and I can have a conversation for over an hour and we can actually be sophisticated in thought. And it's people where I know I'm not just going to walk all over them just by speaking and they can't even respond and hold up an intelligent conversation. And we'd have debates and we'd go back and forth on different ideas. That's what was conducive to good original thought, at least I think. And I went back and forth hundreds of times with various kids, but I want to stress that it was probably less than 5 kids that I could count on my fingers. But those 5 are more than 0, and that's what made it happen for me, along with a million different things that I did reaching out to people outside of the school. But yes, there are, I think, people doing it. You just got to find them, because a lot of people are quiet about it. No one wants to talk about their small, less than $50,000 stock portfolio at the age of 16, right? And then you got some of the people that are in the get-rich-quick MLM type scheme where it's all fake. And I hate that with a passion, but there's nothing you can really do to get them out of it. So.
All right, so about halfway through high school, you say, I want $500,000 in the bank account. So tell, because to me, just hearing your story, a lot of this sounds like right place at the right time, just luck. Because I know people who got into mining and they failed pretty badly.
Yeah.
I know people who got into NFTs and they lost everything. So tell us, how are you able to get in and out of these spaces and build and amass a large portion of wealth? And if you don't mind, maybe even share some numbers.
Yeah, sure. So as I'm going through this process, I'm looking at this bigger picture and saying, okay, how do I get there? How do I get there, right? So I learned that trading, while I could do long-term trades and even medium-term, right, something that's on a bigger scale than simply 12 months, I'm not going to be able to do something on a day-to-day, week-to-week basis that's going to be wildly fruitful in terms of returns. So I moved past that. I touched on the mining. Now I want to touch on this arbitrage algorithm that I got to build alongside some very high up people. This is something that, I mean, just kind of for some listeners, very few people know about it. I touched on it, I think, on a couple different podcasts, but I left it completely out of the book. And essentially what happens is I find this arbitrage play. Think of like Sam Bankman-Fried before all the nonsense with FTX goes on, right?
Okay, hold on. Play. Before you move on, I got to interrupt again.
Yeah.
So you said you found this out. Did you concoct it, or did you meet people at a conference, or tell us more?
Okay, so I see this opportunity, and then beyond that, then I reach out to the people. But I find this opportunity, and to keep a long story very short, essentially, this is what it is. Centralized exchanges and decentralized exchanges, once upon a time, had a bit of a shift in which you could find small decentralized exchanges. The key word is small there, that have low liquidity, and you could drive prices across a 5% scale on some of the big coins.
Yeah.
Because there's no fixed peg, which was crazy to me. But these pegs weren't fixed, and that's where you could see sometimes, if you even go look at like a Binance chart and you zoom in, you'll see these flash crashes up and down, right? And so I thought, okay, that even if these big exchanges can move that far, for sure small exchanges can, especially if you're a whale in terms of that small exchange's volume. And so what I find is that you could leverage decentralized exchanges against centralized exchanges by moving the liquidity levels on a small decentralized exchange. And so what I did was I reached out to some people in Miami, some of the big players, got them to sign a non-compete, did very well with that, where I was able to pay them a very nice amount of money for sure, no doubt, but helped me build this arbitrage algorithm. Because I'm not a software guy. I don't have a comp sci degree. I'm in college right now. I didn't have a degree back then. However, I had this big picture of what I wanted to do. And then I realized I could just reach out to people and they could help me get there. It's that simple. And so I'm reaching out to these guys. We're helping build something, and we come to this final product, and it's this idea that we can arbitrage these two values. And obviously, I don't have to explain what that means, right? But we're buying and selling these coins, and it doesn't have to always be Bitcoin, right? Again, the small cap coins did very well as well. But all we have to do is grab a couple percent. Now, there's a couple keys there. Number one, this only works with Bitcoin having a market cap of less than $250 billion, because you need the liquidity to be able to be dried up. That's the problem. And at this point in time, like, I don't run it right now. I haven't ran it for the last bit of 2023. The last time I ran it was, I think, February of 2023. And it's an amazing algorithm. Obviously, very, very proud of my work, right? It would have been a pillar in what would have been the central, like, big hedge fund, and I still use it for my private clients. However, it's not something that is going to be around for the next 10 years if we're going off the idea that Bitcoin's market cap is going to go up. However, I still used it for multiple years, and it did very, very well. And all we were doing is arbitraging these values, and I was okay to say that this is not going to be a catch-all on certain accounts, and so we'll run it with X amount of dollars and hope that this will benefit a certain amount of percent over time, that maybe we'll have two blowups, that percent can cover the two blowups. And so it was a very simple arbitrage algorithm, but we were able to use it on a very large amount of time over the years of 2019, 2020, and 2021 before we really started to take off.
Would you say that was your primary, that was what really jump-started your wealth?
Oh, no question. Yeah, that was the big breakthrough. Yes,
that was a big breakthrough.
Everything else was good, right? Everything else made money. I mean, obviously, I lost money along the way too, but that is what propelled me to a 7-figure net worth. No question. Yes.
And by the time you graduated, you were able to donate back to your school.
Yes, and that was along with my family. I don't want to take the entire credit of that. But yes, I was able to contribute a very significant 6-figure amount along with my family, making it 7 figures total.
So you know your stuff. You certainly definitely know your stuff. You sound like a CNBC commentator, but you didn't grow up.
I like to do my best.
Yeah, well, you didn't grow up in finance per se, I believe. Like, it's not like you come home from school every day and your parents were lecturing you about stocks and fundamental analysis and accounting and yeah. So how did you teach yourself all this? Was it just listening to a bunch of podcasts, YouTube videos, books on Amazon?
Yeah, I tell people all the time, I think this is where I go back to personal responsibility. My parents were divorced. That's not a bad thing. It is what it is. Don't feel bad for me, right? But dad was out of the picture, and my mom is in real estate. Real estate is not finance, right? Now, don't get me wrong. If I wanted to go into real estate, and I do actually dabble a little bit because of her, she's an amazing jump starter. No question about it. However, I had no roots in finance. And so I think that anything that you want to do, the information in today's day and age is completely at your fingertips. So I thought that, and this is back then, right? I thought I was going to be on Wall Street. That's what I wanted to do. I wanted to be that crazy hedge fund guy on Wall Street making $1 billion. I wanted to kind of go that path because I love work. I mean, I don't know if you could tell, right? I always want to be busy. I mean, even today I've got probably 12 plus things on my calendar. That's what I like to do. I can think of 100 kids I know who'd rather sleep in and who'd rather do X, Y, Z. And that's not a bad thing. That's them. It's not me though. And I always think that if you want to learn something, it's out there. So that's all I did. I started Google searching everything, YouTube videos, everything, podcasts, and simply immersing myself in the space such that I think right now, without a college degree, I think I could run circles around a lot of analysts on Wall Street. I'm not going to say the big dogs, but I think analysts, like summer interns, first-year analysts, I think I could run circles around them.
No,
And
I think you
that's
could
something
run
like
circles around the managing directors too. Yeah.
well, thank you. But I don't think that's something like not in a brag, like not trying to brag way, but it's all about the time that you've put in. And I know, I mean, I'm an economics degree by choice at the University of Tampa. That's where I might be a little bit more strong on the economic side. But I think that if you're putting in the time and spending time with the right people, that you can kind of develop a skill set and increase your competency in any field you want. And I'm a firm believer of that. And I think that my work and what I've done is testament to that. That I had no connection to finance. My parents aren't in finance, and I wanted to do finance. I didn't necessarily want to get into the real estate game. I think a real estate is a great wealth building tool for sure. And I had my own fun in it through my mom pushing me to get in it. But I found that I think that my real money is going to come in this finance world, trading and building and selling companies. And by the way, we'll touch on that at the end when you say what's next. I've got a very cool venture that I've been working on for the last year, so we can touch on that at the end. But yeah, I think that for sure you can kind of jump into anything you want in today's day and age. And as long as you're vetting who you're listening to, because a lot of people can get caught up in listening to the wrong people. But as long as you're vetting those specific people, then I think that you can for sure learn a ton of different skill sets.
I love it. We will get to what's next. I want to talk a little bit about baseball. Are you still pitching for the University of Tampa?
So I actually just hung up the cleats at the beginning of this fall. However, there is a chance I come back. I talked to the coaches there. I didn't close the door in any way other than saying that I don't have time to play this fall. So who knows? Maybe I'll jump back into it in the spring. Maybe I'll jump back into it next year. But for right now, I'm on a slight pause just because I don't have time. And I didn't want to be that guy that was on the field taking up a spot when my heart wasn't in it. So I did take a slight pause on it, but I mean, I still love it. I went to the Rays game for the wild card series and threw on their little radar thing, and I threw 88 miles an hour, and I was like, oh my gosh, put me back on the field, right? But
so you can still pitch.
It's not
like you quit because you just became washed up and weren't as good.
Oh no, yeah, I could still pitch for sure. Yeah, I can go out and throw 3+ innings tomorrow.
So if you're throwing 88,
obviously I got to work on it, but
if you can throw how high can your fastball, or at your peak, what were you throwing? 90, 91?
At my peak, I topped 90.
90? That's
yes.
Did you ever think about just being a minor league, doing the crypto stuff and playing in the minors
every day? Yeah.
Okay.
I've had this idea that I never have to choose one or the other, right? I never want to quit baseball because of business, because if I make X amount of $1 million more over the next, let's say 2 to 10 years, because of that extra time, I always had this idea that no matter what that level of wealth looks like down the line, I'm going to be looking back saying, I wish I could have played more baseball. And I had that thought process forever until like a couple months ago, right? And I realized that while that logic still holds true, in my opinion, right? I shouldn't be forcing myself to play just because of that. And what was happening was I would go out on the field and I'm thinking about the businesses. And if I'm out there and I don't even want to be out there, then I shouldn't be out there. I'm taking up another guy's spot. I don't think it's beneficial for anybody, including myself. Why would I be out there if I don't want to be out there? It ended up being a waste of my time, not because of anyone other than I just didn't want to do it and spend that much time. Baseball is not a light commitment. It ends up being 3+ hours pretty much every single day. And as a pitcher, you got to throw every day. You got to work out every day. So the least amount of time that's going to take is 2 hours, pretty much 6 days a week, a lot of the time 7 days a week. And if my heart's not in it, I can't do that. So taking a little bit of a break. Who knows if it's permanent or not, but that's where I'm at on that right now.
Well,
I still love the game, still going to be around the game, but
yeah, I hope you do. And this is just my opinion. Not that it matters for you, but you're in a position. So most minor league baseball players, like, this is what they wanted to do their entire lives. This is their bread and butter. In your case, you already have amassed a large amount of wealth, and you can continue to amass that even while pitching in the minors, because you're only playing for, let's say, 6-7 hours of the day. When I say playing, I mean training, playing, but you're on the road a lot. You're on buses a lot, flights, hotels. So you can still do that on the side. And I think the experience more than anything, I think the experience of playing in the minors, traveling the country, the networking opportunities, meeting other owners, playing for different clubs, getting traded, I think that's actually going to help your financial business or your financial businesses. And maybe eventually you want to become a GM of a Major League Baseball team. And I just think when you're 22, 23 years old, I think it's worth it to spend 4 or 5 years in the minors just for all those other opportunities. But of course, like you said, you need to train, you need to be a good player, you need to make the cut, and you don't want to take a spot from somebody who you think is more deserving than you.
Oh, exactly. And listen, I completely think you're right. If I could snap my fingers and just jump into the minor leagues right now, I would do it. However, yeah, it's a long, grinding road of hours and hours every single day over the next 2 years. And yeah, that's what it comes down to. It's a huge decision where I was okay to be in the yes camp for the last 2 years, but at this very moment in time, I'm in the no camp. It might not be permanent, but that's definitely where I'm at right now. But I love it. So we'll see.
Well, last question about baseball, and then we'll wrap up the interview. You talked about the crypto and how you learned and how you taught yourself personal responsibility, and baseball is no different. You must have spent 2 to 3 hours a day from the time you were maybe 5 or 6 years old every day, just so you could become one of the best baseball pitchers in all of Tampa Bay. Is that correct?
I started a little bit late, actually. So I got on the lucky side. I started at 10 years old, and I started at 10, so I wasn't good right away. I only became what would be considered good at around 12, 13 years old. I then decided I'd want to pursue it, went to Jesuit High School, which is a baseball powerhouse, got to play there, and then we started to take off, and I got my offer a little bit late. I got it senior year of high school, which is much later than most people get them sophomore, junior year all the time, sometimes even earlier. But it wasn't some easy road. Yes, of course, I had to spend hours and hours all the time working to get this college ride where I got to play at the University of Tampa, which is a phenomenal baseball school. So that's kind of how that happened. But no, I started late, and yes, you just have to put in the work, no doubt. I got a little bit lucky. I mean, I'm 6'3". I got a decent build when it comes to being a pitcher. So I got blessed with that up front, but then you have to put in the work, no doubt.
I want to talk about the future of crypto. Right now, crypto not doing so hot. It reached a peak in November 2021 of, I think it was, let's just say $70,000. And in a matter of 2 months, it went from 70,000 to about like 20,000. Yep. Pretty wild. And it's kind of stayed, or not kind of, it has stayed in that range of 15 to 30,000 over the last 2 years. Do you still believe that Bitcoin and crypto has room for exponential growth? Do you think we'll see new all-time highs anytime soon? For those listening, would you recommend that it's an asset, Bitcoin is an asset that they should hold in their portfolios over the long haul, let's say for retirement or a 30-year time horizon?
100% yes. I'll touch on a couple things here. Number one, I'm a firm believer of the Bitcoin cycle. If anyone's unfamiliar with this 4-year cycle, historically speaking, every 4 years, Bitcoin takes off. It's a very simplistic way of looking at things. The whole logic behind it is that it's tied to the Bitcoin halving. We don't have to dive into the particulars of that, but essentially Bitcoin is scarce. And as a result, its inflation schedule is transparent, and it becomes, it's kind of a loose term to say this, but more scarce over time, to just make it simple. And I think for sure that just as it did in 2021 and took off, I think it's going to do it again in 2025. I think that you should not buy Bitcoin in 2 circumstances. I think you should not do it if you're looking for an immediate return. You should not do it if it's a short-term play and you need that money. Number two, age-old saying, right? Only invest what you can afford to lose. So if you have this portfolio of $1 million, I would not throw $500,000 in. Well, maybe I would. I touched on the liability side, but don't do what I do, right? If you've got $1 million, you should not be throwing over $250,000 of that portfolio in there. Likewise, if you have $50,000 and you decide to throw $10,000, I don't think you should expect results such as what I got, because you're not going to be spending 8+ hours on average every single day for over a year, right? So it comes down to what you're going to put into it. You can kind of expect out of it, unless you're going to go on the passive side. And if you're going to go on the passive side and the play is just to buy it, hold it forever, and look back towards retirement, look back in 2030, look back in 2026, then I think it absolutely deserves a spot in everyone's portfolio, 100%.
How high do you think it can go?
It's a really tough question.
Yeah.
So I think that, yes, we could pass the 6-figure mark, no question. You hear these dream results of $1 million, $500,000, right? And it sounds like it is possible, right? I'm not going to say probable or realistic anytime soon. However, when you look at what function it's going to serve, is it this digital gold? Is it going to be used in transactions? How does that kind of play out? Now, there are a million different cons I could talk about, right? How is Bitcoin going to handle the transaction power of Visa? It can't, right? A single block would be backed up forever, right? 1 million+ transactions would get lost in the mempool. So there are problems. Yes, I don't want to say that it's some perfect solution to everything. However, what I do believe in is that this technology will be used in the long term. I think that Bitcoin will be valuable in the long term. I'm not going to say that it's going to be used for X, Y, Z, but I do think that it can maintain that standard of being something that's not tangible, being something that's on a transparent inflation scale, being something that people want to hold in general. And I think that while people can say that Bitcoin's only worth what the other person's going to pay for it, I think that number is going to be high. And again, that people, some of the old heads that have been on Wall Street for 20+ years would absolutely drill me for that statement, but I stand by it for sure. While it is a speculative asset, right? Because I can't prove to you exactly why Bitcoin's worth 28 and change today. It'd be very, very difficult. I can come up with a thesis and back it really, really heavily, but I can't give you a solid proof. Versus a stock, yes, you can measure by a million different factors. However, I still think that technology is worth something. I think Bitcoin being the first, Bitcoin being the only one where it's got this anonymous creator, Satoshi Nakamoto, all the buzzwords that I could think of, I think that does hold value and will hold value for years to come.
You bring up digital gold. Bitcoin has that nickname of being digital gold. I'm wondering, because we're still seeing high inflation. We saw record inflation last year in 2022. Why hasn't the digital gold taken off? Because isn't gold supposed to take off during inflation? And also now we have 2 wars going on. Isn't gold a safe haven asset during times of turmoil?
Yeah, I think this is a very tough decoupling. That it's been a problem that Bitcoin's been facing probably since its inception. And what's been happening is that it gets this nickname of digital gold, right? Gets this nickname for a safe haven that's outside of the traditional assets. However, it still does get lumped in all the time with various different assets. You can look at it from the gold perspective. You can look at it from Tether back in, I believe it was 2021. There's a lot of different things that you can argue impact Bitcoin's price point. Now, the reliability of that is always in question. However, from a standpoint of saying, is it a digital gold, right? I don't think looking at it exactly as gold is necessarily productive, right? I think instead looking at it as an alternative asset investment for the long term is a little bit more productive. And saying that this is, there's a great argument from Seamus, the billionaire, got the really long last name.
Chamath Palihapitiya.
Yes. So one of his arguments is an insurance policy, saying that throw 1% of your portfolio into it, just 1%. And in the case of an absolute emergency in which Bitcoin goes from not being the majority to a global finance catastrophe, then that 1% will make up for the other 99% of your portfolio. I think that argument alone can be an argument as to why Bitcoin should make up 1% of everyone's portfolio, just as an insurance policy.
Jackson Shembekar, author of The Crypto Kid, a guide to understanding the basics of crypto and the mindset of a successful investor. Youngest portfolio manager in the world. Jackson, what's the name of your company?
So we went across a bunch of different things. It ended up being Shembekar Capital. However, I'd like to stress that it's still private and everything. So I work with private investors. However, it's not this massive thing that I wanted to do with public investors.
Gotcha. Understood. The website is thecryptokid.com, thecryptokid.com. Jackson, so tell us what's next for you and any final thoughts you have.
Yeah, sure. So thank you so much for having me on again. What's next for me? It's actually very interesting. Comes out of left field for a lot of people, and I tell it to. However, it's funny. We talked about the high school buddies. A high school buddy of mine reached out to me about a year ago in December 2022, sat on my couch and said, listen, Jackson, I want to get involved in crypto. Talked to my mom about getting involved in real estate, and he simply wanted advice. He was hungry. He wanted to get into the world of business. We said, absolutely. We said, what are your skill sets? What do you bring to the table? What can you provide such that we're going to help you other than being hungry, right? And he's a car guy. He's a car enthusiast. He loves cars. And he talked to me a little bit about Turo. I'm sure everyone listening to this is very tech forward and knows Turo. Airbnb of cars, and it's a car sharing platform. And he showed me his numbers on Turo, and they are out of this world. So what's next for me? I run a Turo business right now, and I want to make this the biggest Turo business in all of Florida. My goal is to be the second biggest car fleet in all of America before 2027. So I started this business just as a little startup for fun last year, and right now we're at 23 cars. We're going to be at 35 by the end of the year. We'll be at more than 55 by the end of the next year, and we should be at 100 plus by the end of 2025. Right now, we're the fastest growing car sharing fleet in all of Tampa. Not the biggest, definitely not the biggest, but we are the fastest growing. And that's what's next for me. Yeah. It's not detracting from crypto in any way, but that's something that's definitely taking up some of my time and trying to grow just another business in the platform. So, yeah.
I want to share a little bit about Turo so people understand what this is. So Turo is basically a new age car rental service. That's for those who are older listening to this episode or have never used Turo. If you wanted to rent a car, right now you go to rent a car, you go to the car rentals website and you book it through there, or you go to Priceline or Kayak or Orbitz or one of those sites and you can book a car through there. I used Turo once simply because it was cheaper to rent a car on Turo than from an actual car rental agency. And so Turo is operated by independent business people like Jackson, and they have a fleet of cars. You said you have 35 cars, and you said you're only in Tampa Bay right now. Are you looking to expand outside of Tampa Bay?
We're in Tampa Bay right now. We probably will open up in Nashville next year.
Nashville? Why Nashville and not other parts of Florida?
If you do some research into kind of the markets right now, Miami's already tapped out. Orlando gets higher pricings, but there's a lot of competitors. If you go south, there's not a huge market. Tallahassee would be college students. It wouldn't really work out well. Essentially, there's not a lot of massive places that we see great success for in Florida. However, then we start looking out, right? And we go, okay, New York and LA, they're too left-leaning where the policies are really tough to get around and make profit. You've got Texas, you've got all those places, and we ended up leaning on Nashville, and we've already got an operator set up out there. So next year, we'll probably open up with 10 plus cars in Nashville, maybe the year after, but that's our next hub to do business out of for sure.
That's funny because I'm a real estate investor, and the same markets that I invest in are the same markets where you're looking to expand. So I don't invest in California or New York or, like you said, any left-leaning socialist republic. And I do invest. My highest holdings are in Tennessee. My second highest holdings are in Florida. My third highest holdings are in Mississippi. So maybe Mississippi's maybe that's a place you should look into. So you got, where do you house these cars? Are they next to Tampa Airport? Do you have like a lot that you own close to Tampa Airport?
We have a lot, and we do them all off that lot, and then we offer Tampa international delivery as well. So we do about, I want to say around 15% Tampa international delivery. The rest, the 85% run off our lot. We've got a very small amount that also do St. Pete Airport. But yeah, we do low end economy cars. We are always fully booked out, which is why I want to expand this business so much, because we've got 23 right now. We'll be at 35 by the end of the year, and we are fully booked. I've got 23 cars, but if you came to me today saying you wanted to rent a car, I'd say, sorry, the earliest I can get you a car is Sunday, and it's Wednesday today. So that just shows you the demand. We are completely slammed. The rates are crazy. We're able to buy basically just the 30 seconds on our model is we buy cheap used cars. We buy very reliable cars. We pretty much exclusively buy Toyota and Honda with small exceptions. We love Camrys, Corollas. We love Civics, anything like that, right? Your cheap cars that are going to get you from A to B reliably. We buy those. We rent them for anywhere from the lowest we end up renting is about $27 a day in the slow season. And it gets up all the way to, during the holidays, it ends up being like 80 to 100 bucks a day. But prices vary. Our average is around 30 to 40 bucks a day. And we have a full business on Turo, and then we're slowly going to expand into private rentals as well. As of right now, we've got 90% of our fleet on Turo, 10% of our fleet on private rentals. And the money is just out of this world, I must say. Like, I can rent a car that I'm making 40 to 60 bucks a day every single day for the month. The utilization ends up being higher than 90%, and the car costs less than $8,000. If you run the numbers on that, some of our best cars break even on themselves in less than 4 months, which is just absurd. Wow. So, yeah.
And would you say, so for our listeners listening, they're probably wondering, okay, well, all I care about at the end of the day is, am I getting a better deal? So is it cheaper to go through, let's say, your Turo than it is to use a car rental company?
100%, yes.
How much?
As of right now in the Tampa Bay area, right now it's 53 plus fees for the cheapest car at Enterprise. Those fees end up making you $90 all in. Right now we charge 30 bucks our fees after everything, which, by the way, Turo controls the fees. We don't do the fees. After everything, you're paying less than $70. In some cases, less than 60, but I would confidently say less than 70. And so you're beating that Enterprise number, that Avis number, Hertz number per day by more than 20%.
That's pretty awesome. How can people find your Turo profile specifically? Is there a vanity URL or domain, or do they just download the Turo app and type in something?
Very simple. Download the Turo app and type in any kind of thing that you're looking for. Our cars will pop up for you. And then the company's called Riverside Rental Cars.
Riverside Rental Cars. That's great. Well, Jackson Shembekar, once again, author of The Crypto Kid. Get it on Amazon, also on his website, thecryptokid.com. That's www.thecryptokid.com. Check us out at workfromhomeshow.com. Get on our mailing list there. Follow us on social media. If you have any questions about the show or about what we talked about today with Jackson, email us hello@workfromhomeshow.com. That's hello@workfromhomeshow.com. And until next week, keep on working from home.